Hello and happy Monday, June 29th. Welcome to another exciting edition of Rate Desk. I'm your host, Michael Thomas, here to talk about multifamily interest rates and other news. First, going to the markets. We have two cold and hot extremes here from the close of business on Friday to today. Wow, the markets are up. They were red and now they're green. So we're seeing a lot of positivity in the Dow Jones Industrial Average and also the other indices. All three of them actually ended up and had percentage increases, which was good to see. The Dow Jones Industrial led a bit by Boeing, which had good news regarding their 737 MAX. But overall, there's some market sentiment around the Federal Reserve continuing to do more support activities to provide liquidity to the markets. Another consideration, investors are guessing if this lockdown doesn't happen again. They're weighing the COVID news. One journalist referred to it as speculative optimism. I like that phrase. I feel like that's what it is to some extent. And I'm sure we're going to continue to see this volatility of up and down really trending on news or the perception of news. Even though the stocks are up, we didn't see a huge decrease in the U.S. 10-year Treasury yields, which can sometimes occur, but we did see it tighten about a basis point today, closing at 63 basis points or 0.63. Good to see crude oils moving back up, really getting towards that $40 barrel range, which is nice to see, closed in the high $39 range. Jumping on over to the multifamily interest rates, HUD FHA 223F range bound from last week, 244, that is 2.44 fixed for 35 years. And the 221 D4 also range bound from last week, quoting at 308, 3.08 fixed for 40 years. Still incredibly low interest rates. Going on over to the Fannie Mae desk, we are seeing a tightening there, but only really on the very lower end of the range. So the low end of the range is 287, that's 2.87, and the range is 30 basis points, depending on how mission-rich the asset is. That's how agencies define the sweetest spot on their spectrum for pricing, and that, of course, refers to affordability, which we've talked about before. Jumping over to the Freddie Mac desk, we are seeing the low end of that range, quoting at 310. If you were to have a very mission-rich asset, you might see something as low as a 305 on their 10-year money, but the broad end of the spectrum is 310 for them today. Now, the news I want to speak with you about today, really one major announcement came out from the Federal Finance Housing Agency, the FFHA, came out and extended for GSEs only, so Fannie and Freddie, not including FHA or HUD, that's totally separate. They extended the forbearance for multifamily mortgage owners, so people that own properties that have mortgages and are paying them to lenders, multifamily assets, now are able to extend forbearance an additional 3 months. So that is 6 months total. 6 months of forbearance is the maximum of what they're now able to apply for if you are in fact having these difficulties related to COVID-19. Your collections are down, your vacancies are up, you're very challenged to make these payments. You are able to get more relief, which is a positive thing to see. Now, on the flip side of that, you also have to bear in mind that as you accept greater forbearance terms, you do have greater terms of acceptance regarding tenants that are non-payers. So you have limitations that get extended on evictions. You still cannot charge fees or penalties for late payments. And now the maximum term for a tenant, if you accept this additional term of forbearance, is 24 months. And you are expected to really work out these repayment arrangements. They do not want to see an owner coming back to a tenant and saying, for the month of November, you now owe $15,000. They don't want to see the lump sum payment. They want to see that you've worked it out gradually over time. You've really made an effort to accommodate your tenant to keep them in that property, which feels like the right thing to do, especially if you're getting an extended accommodation like that. So that was big news today. Nothing major yet to report on the HUD FHA side. Do expect that new FHA map guide to be issued at some point this year. Hard to say when now, given all the things that are currently going on. I did check with one of the key offices of HUD, and their turn times are very quick on picking up applications. I want to say 2 to 3 weeks was what I was quoted today on that. So that means you send an application in and they're really meeting their turn times. They have up to 45 days, but 2 to 3 weeks, that's great. So they're still moving through applications, even though there are some unprecedented volumes really hitting these different HUD offices across the country. That's all I've got for you today. Please tune in tomorrow for another exciting edition of Rate Desk. I'm your host, Michael Thomas, signing off.